Hey everyone, me Kevin here. Welcome back to a market closing. Let's go right into figuring out what the heck is going on in the market today because we've had a little bit of a weird market. We've seen a pullback this morning in the private live stream with course members. I was mentioning, hey, when we start seeing broader swaths of, tech stocks and other really quality companies start selling off a little harder core, maybe it becomes a little bit of a sign that maybe it might make sense to reduce some of our margin a little bit and just be careful to see, are we potentially going to hit a more protracted kind of pullback? Or is just temporary? Tesla hit new lows today, but it's ending the day higher. In fact, let's take a look at what the heck is going on because even the stock that we were swing trading this morning and made some good money on just hit some new highs. Let's go take a look right now. So here's what's going on in the market. Look at this, folks. EHang has broke $80. This was an expectation that we had yesterday that there was a chance this could go to $80. We took profits at some of the volatility earlier in the day, or at least I did. But folks, this thing has had the volatility throughout the day to keep moving. We had some softness over here during the morning open live stream, but then we had a push, we had a drop, and now we're going parabolic right into the close. Absolutely phenomenal for a company that we know had a hit piece against it that the company didn't even yet have a chance to respond to. Short sellers may have made their profits, but hopefully you jumped in and made some tendies here as well. I certainly got my tendies on this one, so congratulations if you did. We've got the Matterport SPAC. The Matterport 3D scanning SPAC is the software as a service. All of a sudden, up 14% today, rallying into the close. We've got Tesla, which was down to a low of $762 today, is getting ready to close over $800 again. The buy under threshold for Tesla is under 800. Folks, hopefully you picked up some tendies on Tesla as a buy and holder. Tesla is a notoriously difficult one to swing trade, but it is one to hold. Folks, we are 2 minutes away from the closing bell, and we're going to get some earnings here as well. Take a look at this, though. People yanking their money out of Sundial going into the close. Big red candlesticks moving into the close on Sundial. Microvision not doing much better. Big red candlesticks. Bad, going right into the close. OGI, we're out of this one, but the entire cannabis sector in pain today. We've got Tilray down 8%, Clever down 9%, 9.8%. We've actually got Tilray rallying a little bit into the close here, though, because they are reporting earnings today. Tilray is set to report momentarily, so we've got a lot of excitement going into this one. We'll make sure we get the Bloomberg terminal up as well. We've got Lemonade selling off a little bit again, Xpeng selling off, Neo selling off. We got lots of red to look at in the market today, not as much green. But look at this, all of a sudden, out of nowhere, QuantumScape rallying into the close. A consistent move today. We started the day up about 10%, and now we're going to end on QuantumScape about 31% up. Again, the Matterport SPAC running to new highs. We've got Churchill Capital selling off into the close, but still, even after a sell-off, hitting a new all-time high in excess of $55 a share, printing chicken tenders. Oh my gosh, with some profit taking into the close, but it's no problem because look, we've got Shift Technology up 3% today. Oh my gosh, I cannot believe it. Did Tesla cross it? Tesla's so close to crossing 8. It almost crossed it. It was within 16 cents of crossing 8 again. Obviously, a massive holding of mine and a stock that we love. We got Gevo selling off 10%, trending down along with the cannabis and some other stocks. We got Affirm Holdings having a hard time finding love out here. Lemonade, again, down. We got Shopify down on earnings this morning. Etsy down a little bit to 222, still at all-time new highs. Let's listen in to the
Amazon higher for the day, and of course, Apple is lower for the day. Heading into the close, we are looking at a decline overall for the S&P, more so for the NASDAQ, but off the session lows. And for the Russell 2000 index of small caps, down 0.75%. We're seeing the dollar a bit stronger. And Treasury yields, after that huge backup all the way to 130 yesterday, still trading right around that level. There's a little bit of selling and buying in bonds. And a little pressure on those yields. Still trading, though, near their one-year highs. Wilfred.
Another record close for the Dow. Welcome to the closing bell. I'm Wilfred Frost, along with Sarah Eisen and Mike Santoli, CNBC senior markets commentator. The Dow up 0.3% or 91 points. It had surged briefly to 120 points high, just pulled back a fraction as we approach the close, but anything positive.
Tiny little gains here in the market right now, but in terms of the broader indices, lots of red too that we're seeing. Let's see what the breaking news is here. What's our breaking news? Record close. Okay, well, we already heard that. Bitcoin, folks. Bitcoin printing tendies as well. Look at this. Oh my God. $52,000 on Bitcoin. Oh, man. Printing the tendies. Let's go ahead and jump on over and look at the after hours charts. After hours, what's moving in the after hours? We got Naked up, GameStop up, Microvision recovering a little bit in the after hours, Clever recovering in the after hours. We got Cannabis recovering in the after hours, Twilio up in the after hours. Down in the after hours, Lemonade, Wells Fargo, Tattooed Chef, Wynn Resorts, Clover Health, Nikola down, Tesla a little bit down in the after hours here, back down to $796. Let's go ahead and pull open the terminal. Let's get ready for earnings. Let's listen to what they're saying here for a moment.
Yes, Apple down. Semis were weak today. A lot of the kind of high-flying cloud stocks gave back some. On the other hand, I think you had the net gain in most of the cyclical sectors. Also, at the index level, it's the second straight day with an absolutely minimal S&P 500 daily change of less than 1/20th of 1%. That's also the fifth in the last 6 days of less than 0.2%. So in other words, the S&P 500 is kind of just hanging out there as there's a lot of churn below the surface and reorienting positions away from some areas and into others. I think you'd have to say that it's probably pretty good for the market to kind of stand still near all-time highs as opposed to buckling when you do have a lot of cross currents, all else being equal.
That's a good point. I mean, really, we are seeing, we're hitting these all-time highs, but we're seeing this. It almost feels like a slowdown happening a little bit, right? We're not seeing that insane growth. Obviously, it depends on what stock and the security code that I got here. Who knows? Maybe this is an indication of what we should be expecting coming up. Maybe this is like good news for earnings coming up for this particular company. Minus the 2 in the front. Is it ever going to focus? No. Come on, focus on the thing right in front of you, you stupid camera. Here. Oh, I'll do this. This usually works. There we go. 2. Just ignore the 2. There you go. It says shift on the Bloomberg terminal login thing. All right, let's go ahead and get the Bloomberg terminal up. We'll also see what's going on with the sticks. We got Bitcoin all-time highs, 52,000. It actually hit the all-time highs just about 20 minutes ago at 52,451. We sold off a tiny little bit, give a tiny little bit of a give back there, but it's nothing compared to the all-time highs that we are at now. Definitely a sign for a shift. Absolutely. Let's look at the candlesticks while the terminal pops open. We are waiting for earnings to come in. Let's see how we're settling over here. We got SunPower moving up. Not sure if this is because they've just released earnings. It could be. This could be a release on earnings. Waiting for that terminal to pop open. Here we go. Let's look at this stock here. Oh, it's SunPower. Let's see if they've released SunPower. Come on. Waiting for that terminal to actually cooperate and stop loading. It takes like 20 minutes just to turn the darn thing on. But once it's on, then we can print tendies. All right, let's go. SunPower. Let's see here. SunPower. All right. Let's see what we got here. Let's get some individual company news. We're awaiting Tilray as well. So we might be able to see Tilray first here. Do we get earnings? The earnings preview. Implied 19% implied movement in SunPower. Woo! Let's look at Tilray. Tilray company equity. Let's see what we got here. See if we can beat CNBC to it. QuantumScape. Yeah, QuantumScape's up definitely more than this. But why are we on QuantumScape? I just pretty sure I typed in Tilray. Let's go back here. Let's go back. Come on. Give me Tilray. Here we go. Tilray. Tilray news. All news. I'll just go here and then we'll go. Tilray individual company news. Hopefully I got the right ticker here. Okay, here we go. Call put ratio 2.1 calls to 1 put in the quarter. We have a 24.1% movement expected in Tilray. This is going to be big for the cannabis sector. Really, really big implied movement here. Potential for Tilray. Let's go ahead and put SunPower next to it as well. We've got other earnings as well. Let's see. We've got, here we go. SunPower's out. We got it before CNBC. We've got, a miss at SunPower. 341.8 million versus an estimate of 358.5 million. SunPower misses with an earnings per share of $2.08. Wow. Okay, so let's see how the stock's moving here. Let's pull up Webull to get our up to the minute. SunPower, there it is. We got the drop on SunPower. A lot of enthusiasm initially going in here, but a miss. Shift just gave up their gains during the day, but that's okay. We don't have any earnings on them. So we'll see what happens with SunPower here. A miss on SunPower. We do not have Tilray yet, but it looks like possibly Fastly reported. Let's see if Fastly reported. Obviously, the engine here behind TikTok. A lot of enthusiasm. Finding an individual. Let's see here. SunPower now flat. Tilray to report. No, not yet. Fastly. Do we have this yet? Fastly implying a 20% movement. Woo! This is going to be big. It's going to be some big old movements here. Let's see what's actually finishing up, though, on SunPower. How's SunPower? We know SunPower missed, so we're curious to see how they're going to behave here in the after hours. Very volatile so far. So we'll see how this actually ends up developing. SunPower, this will be a really good indicator for, future other solar businesses as well. Fastly still rallying 6% in the after hours. Sundial trying to creep up as well. Churchill Capital trying to creep up. We've got Tilray. Nope, no. Oh, here we go. Fastly. Fastly full year revenue up 45% year over year. Did we report? Let me see here. Okay, I think they might just now be pushing this through. Fastly full year revenue up 290, up 45%. Okay, let's see how this compares to expectations. Obviously, the stock is rallying right now. Nothing on Tilray yet. We got Fastly at about 5% up here in the after hours. So waiting for some more updates to push through. Let's see. Shift bouncing back. That's good. Let's see. Okay, let's look here. Losers right now in after hours. We got QuantumScape losing, Pinterest losing, Tilray still no reporting here. We got Carvana, Nikola, Fisker, all these guys shaving a little bit in the after hours. Fastly, the one really pushing, but I don't actually think we have earnings yet here from Fastly. Still waiting. We got Sundial might be in a bubble, but this group remains attractive, referring to Tilray potentially here. I want to get back to the news page here. We'll give it a quick. So, Seeking Alpha article. Let's see. Yeah. Canadian cannabis stocks have surged. Okay. I don't want to sign in right now. I just want to see the earnings. We'll come back. So, enthusiasm on Tilray. Sundial up 2% here. We're at about $1.70 here. OGI trying to sneak up. See how these earnings come in. Good job on the BlockFi video. Oh, I appreciate that. Thank you for saying that. Thank you. Yeah, I'm really excited. I sent my wire today to... what's it called? Gosh, I sent my wire today to a BlockFi. I wanted to see if I can pull it up. Can I pull it up? Yeah, it's gonna be hard to do that while we wait here. But I could push this button. No, you can't really see it. I pulled up the wire here, but basically I sent him 250K. I don't think can you see that? Oh, yeah, you can. Yeah, you can kind of see that. But anyway, BlockFi. So I'm excited for that to go through. But it seems like every minute that it doesn't go through, Bitcoin just keeps going higher, which is really kind of annoying. I wanted to start doing this last Thursday, and it's been up like $7,000 since Thursday. Oh, Fastly's out. Let's go. Let's go. Oh, come on. Get out of here. Get out of my face. It's this one. There we go. Fastly, okay, what do we got? Earnings per share 40 cents. They're not giving me what the expectations were. Probably just trying to figure that out right now. Adjusted 9 cents. Okay, so we'll see how this comes in. Let's see how Fastly is behaving. So far, I think the market's still kind of waiting for a little bit more info here, a little more digestion of the information, but does look like Fastly slowly moving its way up here. Remember, this for a period of time was like $120 stock. It fell down a good chunk here. Yeah, let's see here. We've got, let's see, Fastly. No, still don't have our movement here or information here. Where's SunPower down about 1.5% here? They actually got the SunPower CEO on right now. We could listen to him just for a second while we wait for a little bit more data from Fastly.
Storage. And since it's getting so much headlines, it's having an impact. We think it'll have an impact on demand throughout America.
When you say that, because people want to control their own power supply.
That's actually a really good point. What's happening in Texas is probably good news for companies like SunPower or even Enphase or even Tesla, because maybe there'll be more of an incentive for people to buy these electric batteries for their homes, these storage batteries for their homes. By the way, I was going to finish the thought on BlockFi. If you want to check out BlockFi, go to metkevin.com/BF, BlockFi, metkevin.com/BF, and you'll get up to $250 for free when you deposit some money with BlockFi. Let's keep listening in here.
And the sun came out and recharged their battery. So you can make a meaningful difference today. And of course, costs are coming down so fast that it won't be that long, within a few years, where perhaps you can be autonomous and a friend to the grid, where you're helping export when you're overproducing.
As it relates to the results, Tom, looks like a revenue miss. Your stock's not trading on what's happening this past quarter. It's trading on the enthusiasm for federal policy changes in your favor. A green energy type bill, an infrastructure climate type bill from the Biden administration. What are your expectations? When do you start to build that into your forecast?
Well, I'd say two things. One, they're right. The federal support is fantastic. The investment tax credit was extended. There's work being done on extending it further. There's work being done to include.
It's out. Fastly's out. Let's go. We got, Fastly beats on revenue by about $800 million. They had a loss of 9 cents a share versus 11 cents expected. So they beat. Not much, not a lot, but they definitely beat. So Fastly beat. I wouldn't be surprised if this ends up settling over 100 here. Let me hide myself here. The stream tomorrow, by the way, should be 9 a.m. Eastern time for the hearing of Robinhood and Deep Value and that. So we'll be seeing that, and I'll be adding commentary. So make sure to come for that or just watch it later. But I do plan on streaming that. So Fastly, small beat. So because of the small beat, I think the stock's just not given that push that might have come otherwise. Fiscal year adjusted EPS. Okay, so this is so they're providing guidance. So much higher guidance. This is actually really good guidance. Much higher earnings per share expected for the year, with 44 cents to 35 cents versus 21 expected. Total customer count barely rose. We had about a 37 customer count increase at Fastly. So, that's one of the risk factors with Fastly is a very high concentration of customers, especially their top earning customers. But sometimes you get that at the software as a service businesses. We do have the cannabis ETF soaring 7% in after hours. A little odd. I wonder if there's almost some kind of hedge fund buying or some kind of large buy here that would push that. Because ordinarily you would see earnings as a catalyst for some kind of push up here. This must have been some unusual buying activity here at the cannabis ETF. We got Nano Dimension up 2.2% here in after hours. Let's see. Who else is reporting today? We're still waiting on Tilray. I got a list here. I think Energy Transfer and Cheesecake are reporting today. Let's see if we can get Cake. Okay, the Cheesecake Factory. Individual company news. See how they're doing. No info yet on the Cheesecake Factory. We've got, who else is reporting today? We have Tilray. We're waiting for them. Twilio, really good, service, software as a service again. They, for example, they've got a service. They do a lot of back end work for like a Zendesk, which is customer service management, text messages, voicemails, emails. There we go. Twilio's in. Twilio literally just came in. I mean, we're talking right now. It literally popped up here at 4:15. We've got a adjusted EPS. Okay, so they beat on EPS 4 cents of a loss versus an expected 7 cents. Let's on earnings per share. We've got a loss of 179.4 million. The revenue, big beat, 548.1 million versus 455. Big beat. That's going to move this stock. There it is. There's the movement on Twilio. Big movement on Twilio. There we go. Push that candle before it gets on CNBC. Push it up. this could be 20% up. I mean, that is a huge beat. Oh my God. That's like more than a 20% beat on Twilio here. It's a company we've got in the pies, the M1 Finance pies. If you don't know what those are, in the description below, you'll see pies on metkevin.com/1337, 38, and 39. Twilio does make a featured appearance in 37, which is a little bit more of one of my diversified portfolios. If you sign up for M1 Finance, by the way, before the end of the year, or before the end of the month, I'm sorry, so within the next 2 weeks, and you deposit $100, they'll give you $30 totally for free. So you have $130 to invest with. Twilio moving big on this move here. I mean, this is a very good beat. We're seeing Twilio move like this compared to Fastly, because Fastly, was not impressive. Fastly didn't really do anything. Twilio, on the other hand, this is nice. This is very nice. This is very nice. So maybe some profit taking to quell the green candlestick there. That's okay. So we're not going to day trade in the after hours. Some people do. The volume's too low for me to day trade in the after hours. But it's good to keep an eye on. Yes, Bitcoin, folks. Bitcoin moving right back to its all-time highs. Whenever my money actually freaking clears, maybe I'll actually be able to buy some. It's been very painful watching Bitcoin go up with my money sitting on the side, waiting for my ability to purchase it. Oh, well, that's the way life works. So let's see what we got here. Fastly now down 4%. Yeah, it wasn't that impressive. SunPower missed, so they're getting spanked for a miss. I mean, solar, winter, kind of makes sense. CEO comes on talking about batteries, and bye-bye, SunPower. You're going down. Like, yeah, literally, it's red candle sticking as we're speaking. And I don't want anybody to lose money here, obviously, but that's what's happening. Oh, Redfin back under $90, folks. Redfin, pay attention to this. Redfin reports earnings next week. I think they're going to destroy earnings. I'm very excited about that. I usually don't like to play earnings, but Redfin is one that I mean, I've got a lot of money in it, so I'm playing earnings no matter what. I'm not going to sell any of my Redfin shares, but it's been very good to us. So it'll be interesting to see how much is already priced in. That's the tough thing with playing these. Oh, did Twilio report? We got a big candlestick. There we go. Twilio reports. We got revenue 21% year over year. Barely beat. They got 1.1 million more in revenue than the estimate for Q4. They have, let's see here. So revenue beat the estimate. We've got adjusted loss of 2.25 million for the quarter versus a loss of 35.3 million for the year, which is obviously a much higher loss rate per quarter on average than they're having now. So less losses, more revenue, good beat here. Total kilogram equivalents sold minus 80% year over year. I'd have to learn what this exactly means here. Total kilogram equivalents sold. I mean, that doesn't sound good, but it's interesting that their revenue beat despite this decline here of kilogram equivalents sold. Yeah, okay. So, but it's still a beat and much less of a loss per quarter. And when these companies get out of their money losing stage, people are going to like these companies so much more. It's just so much more easy to value a company that's not losing money. Yeah, look at that. Both Twilio and Tilray pushing the candlesticks here, as they should. And look at that Sundial, OGI, Aurora Cannabis, Canopy Growth, they're all moving with it. Where'd the cannabis ETF go? That's THCX. THCX. Is it X? Yeah, THCX. No, not Tech Central. Cannabis ETF. I don't know why I can't see it right now. Oh well. But anyway, I do think that cannabis ETF movement was just an anomaly, like somebody executing a big buy, and then it's gone. And it's gone. So that's not a surprise. But yeah, Twilio pushing. Tilray fighting a little bit, but it's definitely drawing up the cannabis movers here. And Matterport. And Matterport. Oh, man. Bitcoin Larry says the chat over at Twitch is lonely. Yeah, most of you are obviously watching this on YouTube, but I am also streaming this at the same time on Twitch and Twitter. So that way you could see it live in the event that you wanted to see it on those platforms. All right, what else we have? Sorry, the chat is lonely over there. Fastly and SunPower not too happy here in the after hours after those moves. We got, Cheesecake must have posted. Let's look at Cheesecake. Cheesecake Factory. Individual company news and Cheesecake Factory. Here we go. They have, big miss. We've got 32 cents of a loss versus an estimate of 5 cents. Ooh, comp sales. So that's comparing quarters. Are down 19.5% compared to estimates of 10.8%. Bad juju here at Cheesecake. This was an expectation. At the beginning of this week, on Monday, I think it was Monday, maybe it was Sunday, I posted a video saying that I'm worried that the restaurants like Darden Cheesecake are going to miss because you've had such a harder, COVID season here. Let's see who they're reading off. Oh, they're reading off Twilio. CNBC is just now reading off Twilio. We did that like 10 minutes ago.
65% to 548.1 million. Street was closer to 455 million. Looking ahead at Q1, they're seeing a loss of between 9 and 12.
In case you're wondering why the candlesticks are always already green when you see it on CNBC. No hate in CNBC, okay? I like them. But
491 million. Jeff Lawson, Twilio's co-founder and CEO here, saying in a statement that they are addressing what he calls a generational opportunity, says they're building the leading customer engagement platform to improve every interaction that businesses have with their customers. Stock is shooting higher here in the after hours. Remember, heading into this print, stock was already up about 5.
It's a very strong performer there, Josh. Thank you. So to come, Mike Santoli will head to the telestrator with a look at economic inequality. Plus, we'll be joined by Representative.
All right, let's see what other. A lot of you actually went over to the chat or are posting in the chat in Twitch. So let's see what we've got. We got Twilio. Look at this move on Twilio. I'm telling you, this could be up 20% tomorrow. And I said it when it was up. As soon as I read those earnings, and I saw it up 6%, I'm like, this could be up 20%. And we're heading into that direction because that is such a smash on expectations. It is such a shift in what was thought of as maybe a potential here. So very, 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 very good. I mean, this is a market readjustment here. Big move here on Twilio. Who's next? Groupon? I don't know. Do we care about Groupon? Let's see here. Groupon. We'll look. Oh, wait. Hold on. What did Cheesecake say here as an excuse? About 80% of restaurants across brands have indoor dining rooms open now. That's good. And let's see here. Okay, here. Cheesecake included pre-tax impairment of assets and lease termination expense. Oh, that's maybe why they showed higher expenses. Comp restaurant sales down 19.5%. I mean, we a little bit expected that. Again, Darden's going to be next. I wouldn't be surprised if Darden's trading down because of this Cheesecake move. Groupon. Let's see if we get Groupon here. Yeah, Tilray we hit. Tilray was good. It was a decent beat. Nothing. I mean, it was like another $1 million or something like that. But their losses narrowed, which was the big reason I think that one's moving. I do not actually see earnings yet at Groupon. We've got. I do want to see Shop though, but I'm pretty sure Shop reported this morning, and I haven't looked at them. But I don't think I'll be because it's so long ago. I don't think I'll be able to see it. Let's see. Can I scroll down? Let's see. Oh, here we go. So these were the earnings that came out this morning at 4 a.m. California time. And Shopify actually did well. I mean, that's what is that, a 7-8% increase in revenue? So they did really well on revenue. They beat this morning. Adjusted earnings per share were $1.58 versus $1.21 expected. Versus 1 cent a year ago. Very good. Revenue continuing to grow rapidly in 2021. Rapid growth in gross profit dollars in 2021. Q1 contributes the smallest share. I mean, I don't know why Shopify sold off. I mean, all of this looks really good. Earnings beat as pandemic boosts online shopping. Oh, maybe because of them saying, oh, it's the pandemic that's helping us, and people are starting to go, well, the pandemic's almost over. That could be a possibility here. All right. Let's see here. Okay, what do we got here? Okay, so let's go ahead and continue to explore our charts. Twilio moving down a little bit. A little consolidation there. I still think this thing could be up 20%. We'll see what happens. I mean, I'm not trading it. The volume's way too low in after hours to trade these things after hours. I just like to watch it. Clever, Aurora Cannabis. Remember, volume really helps us push. Oh, look at this. Redfin went positive. Shouldn't have been down. SunPower Fastly leading the losses here. Cheesecake, not horrible. Super low volume. I mean, there's like nothing happening at Cheesecake. Nobody's buying Cheesecake. What are they going to report now?
Tilray shares jumping on these results. A beat on both.
We heard this a long time ago, like 10 minutes ago also.
A loss of 2 cents per share, while the street was expecting losses of 15 cents per share. So a pretty significant beat there. On the top line, $56.6 million, $55.8 million for the fourth quarter. Now, the company says that a lot of that revenue growth was driven by international medical and Canadian adult use during the fourth quarter. And they were also able to reduce costs by $57 million on an annualized basis compared to the same quarter last year. Now, as we mentioned last hour, Tilray is in the process of combining with Aphria to create what they call the world's largest global cannabis company based on pro forma revenue. They know that transaction is expected to close in the second quarter of 2021. As for some color surrounding the cannabis industry, they said that the average cannabis net selling price per gram increased to $5.97 compared to $1.88 during the fourth quarter of 2019. Guys.
Let's see.
All right, so that's Tilray. Yeah, I mean, Tilray, I mean, that's interesting what they said, Canadian use, a lot of extra Canadian use. Take a look at this, Vlad from Robinhood here. So much interest in crypto. To be crystal clear, we fully intend to provide the ability to deposit and withdraw cryptocurrencies, including Doge, because right now you can't do that. That's one of the reasons I have opened an account at BlockFi, because I can not only deposit cryptocurrencies, but I could get paid interest on my cryptocurrency in Bitcoin. I could transfer Bitcoin to my wallet if I wanted to, or to another Bitcoin service if I wanted to. I can't do that with Robinhood, but it sounds like that option is coming for Robinhood. But do this if you haven't yet. Go to metkevin.com/BF. And at the very least, all I ask you to do is, if you haven't become familiar with this yet, is look around at some of the options they have. The crypto interest account. Look around at this, study this a little bit, ask questions, research them. The crypto-backed loans. This is, be careful, taking out margin on crypto, being very volatile, be careful. They do have trading. I think they don't have limit trading yet, but I think that might come in the future. But yeah, take a look at this. metkevin.com/M, I'm sorry, not M1. BF. M1 is great too. You go to metcalvin.com/M1 as well, but they don't do cryptocurrency and they don't have any intentions of doing crypto either. So Tilray is a really banging up here. I mean, yes, look at that move on Tilray. That is very good. Very, very, very good movement here for the cannabis stocks in general. So I'm excited about that. Let's see here. Okay. What else do we have here? Let's go Tilray. Yes, push it. BlockFi. Yes, this is true. Paul Gordon says the BlockFi internals are run by Gemini, which I personally actually really like. The one benefit that I do like about BlockFi is that they offer you Bitcoin to buy at spot. So there's no fee, and that's because they're doing lending to make revenue. Folks, I do want to just show here, just because it's crazy. We are at all-time highs right now. Right now, we are at all-time highs on the BT of the C. Yeah, got really my BTC and see if my money or my see if my money's there yet, because I'm tired of waiting. Although I did just wire this morning. In fairness, it's probably not going to show up until tonight. You wire money, they say it might come fast, but sometimes it's just not fast enough and the market moves on you. That's the way it is, though. So we'll see what happens. All right, so let's go back to the sticks. Going back to the sticks. Let's see what we got here. Tilray, 14%. Twilio, 12%. Still think there are legs in our Twilio here. We'll see what happens. Great service. Really showed up fastly here. Not obviously in exactly the same vertical, but certainly a SaaS. No money yet. But like I said, I just wired the money like 3 hours ago. I gotta give BlockFi. But do use that link, because you get a free $250 depending on how much money you spend, up to $250. As well as Afria. Yeah, let's go. Elon making Bitcoin the next Tesla. Here comes 700% gains. Let's go. BlockFi is great, but uses hot exchange wallets. It's like any other trading account. Cold storage wallet is where you should hold long-term crypto assets. Brian, tell us a little bit more. What BlockFi told me is they take 95% of their coins and they put them into a cold storage wallet. So they do what you're talking about. They keep 5% though. 5% is in a hot wallet. And then that is insured. So 95% is cold, 5% is hot. Yeah, I asked lots of questions yesterday, and we got to get some Bitcoin folks on the channel to interview too. I'm looking forward to doing that. So let's see. Let's go back to Bloomberg here. Let's see who else is reporting. Oh, Bloomberg closed on us. Jerks. Okay, let's listen to this for a moment.
Now, in a First on CNBC interview, Congresswoman Maxine Waters, chair of the House Financial Services Committee. A very good afternoon to you, Congress, joining us.
I'm delighted to be with you. Thank you for inviting me.
So clearly there's quite a long list of different characters and companies that are attending your hearing tomorrow. Let's start with Citadel and Ken Griffin. What's your main question for them?
Oh, well, I want Citadel to tell us what role they played in what happened, I guess, January 28th.
Yeah.
And I'm simply asking for facts. I do not come with any preconceived notion that I know everything that went on. And I'm asking them not to come with a lot of extraneous material. Tell me exactly, what role did you play in what happened January 28th that led to the volatility and the...
I see your comments. I know some of you don't like her. I do want to see what's going to happen for tomorrow, though. We'll listen for another minute or so here. We'll go back. I'm getting Bloomberg up too.
Attending, do you think were most to blame?
I have not concluded that. That's why I'm having this hearing. I want each of them to tell me exactly what role they played. And I expect them to tell me exactly what they did. Whether it is, Robin Hood that's testifying, or Keith Gill, or, any of them, I want them to tell me exactly, what did you do?
Okay.
But who do you think has the most explaining to do, Congresswoman? Because already a lot of the politicians who have voiced concern over this have raised questions specifically at Robinhood for why they restricted trading for some retail investors. Is that sort of what you're thinking as well?
Well, no, I'm going to see what he's going to do to respond to the way that I have insisted that they be very factual about what role that they have played. I am not going in with any preconceived notions. You know, I've gotten so many calls from so many so-called experts on all sides.
Okay, let's go ahead and go back to the sticks here. So far, well, hold on. It's Bloomberg. I'm still waiting for Bloomberg. We'll listen in for another 30 seconds.
Players, what role did you play? What did you do? We'll have experts in our next hearing that we will have. And then on the third one, we probably will have enough information to really determine who really did what and whether or not there was collusion, whether or not there was conflict of interest, whether or not there are things going on that's in violation of SEC rules. And we'll be able to make a determination about what kind of legislation we will be involved in. So I'm not starting out with preconceived notions at all. I want them to come and I want them to tell us exactly what they did.
Where do you stand, Congresswoman, on payment for order flow? And clearly on one side, it's democratized trading and allowed people with smaller individual trades to place trades for free. But on the flip side, their data and the information based on those trades is being sold to the highest bidder. Do you think payment for order flow should remain in place long term?
I don't, in the final analysis, the truth of what each of these players did or the way that they were involved will come out.
Ooh.
There are other sort of characters in this story as well, Congresswoman, like Dave Portnoy, the famous retail trader, Elon Musk got involved, Mark Cuban. Do you think they bear any responsibility?
Oh, we don't know. That's a whole nother issue, dealing with Elon Musk and Bitcoin and all of that. That will not play in these hearings, especially tomorrow. What we're going to do is deal with the players that have been clearly identified that were involved in January 28th. I want to know exactly what happened with Melvin Capital, and you know if they, in fact.
All right. Well, we're gonna she's providing us any kind of info here. She's kind of just like, I don't know anything, and tomorrow I hope I learn more. Got it. Cool. Let's hop on over now and let's see what's going on news-wise on the sticks. So let's jump on over. I was hoping to get a little bit more of insight. You know, like to me, I think it's cool when you have, or I shouldn't say necessarily cool, but like me, I'd be up there going, you know, hey, look, this is what I'm hearing. I'm hearing that these are the kinds of shenanigans that went on, and if this is what's going on, then that's wrong, and somebody's head's got to get, obviously figuratively here, but yeah. Anyway, Twilio stock jumps, Tilray pot sales up. Yep, we've seen these. Let's see. Let's launch this here. This is just all the news coming in right now. Launching the launch pad. Let's see if anyone, by the way, having any kind of blurriness in the stream or any kind of internet issue, or is it better today? I made a couple changes, so hopefully it's more positive. It's better. Let's see here. Tilray pot sales jumps ahead of merger with Afria. Yeah, absolutely. Tilray gains. Avis Budget Group is raising debt. Okay. Google to pay News Corp for access to publishers' content. We've got Armor Residential, AK. Let's see. Anything interesting? No, not really. Okay. Let's jump on over back to the charts. Let's see what's going on over here. Streaming good. Okay, good. Interesting. Yeah, mixed feedback. So some of you saying I paid off the suits. And then someone says I randomly froze earlier. Is it just my face that freezes earlier? Does that happen often, I wonder? Just froze for a couple of, not blurry, but freezes here and there. Huh, interesting. But somebody else says a little fuzzy on the screen. Ah, okay. Well, hopefully things fix themselves. Ah, energy transfer. That's another one. Thank you for bringing that up. Let's look up energy transfer. Okay. Energy transfer. Is it must be, is it ET? Energy transfer equity. This has got to be it. Let me make sure though. ET stock. Yeah, there we go. So ET's down about 1.5%. Earnings per share of 19 cents, which apparently is greater than estimates. Let's see, it's hard to say. They actually didn't provide, no, misses on revenue. EPS misses by 8 cents, misses on revenue. Got it, slight miss. And so that's why the stock is moving that way. Okay. Oh, let's see. Reuters. Ahead of GameStop hearing, Robinhood, Melvin Capital, and Kitty, Roaring Kitty published testimonies. Really? Okay. Laid out their defenses ahead. Well, I want to see him. Whoa. Here he is. Testimony of Keith Patrick Gill. Oh, before I got, oh, dang. Woo, this is what he's going to say tomorrow. Oh, before I go further, I want to be clear about what I am and I'm not. I'm not a hedge fund. I do not have clients. I do not provide personalized investment advice for fees or commission. Right there, legal statement, folks. Okay, so let me just make this a little more clear what's going on here. Just so we have a clear understanding of what we're looking at here. And what I'm going to do really quick is I'm going to put this on my iPad because it's going to be a little easier for us to see this. So let's do that really quick. We're going to transition this over. One sec. This will go much, much, much easier because then we can also annotate what the heck is going on. But this is exciting. So this gives us a preview at what to expect tomorrow. Okay, here we go. Transfer over to the iPad. And then we're going to go through this because this is interesting. We'll shouldn't take too long to go through it. But this is like what happens at Congress regarding all these shenanigans that went down. It affects the future of the retail trader, right? It's a big deal. It's a pretty big deal. Okay, so here we go. I will do a quick little intro on this. Okay, so intro. Hey everyone, B. Kevin here. So Deep Effing Value has published his testimony in terms of what he expects to say at Congress tomorrow. He's going to get grilled in questions afterwards, but let's take an early look to see what is his testimony going to look like. We've got it right here. So let's pull this up and go through it one by one. Here it is. So it's kind of intense. I want to see this. Okay. Thank you, Chairman Waters, Ranking Member McHenry, and members of the committee. Before I go further, I want to be clear on what I am and am not. I am not a hedge fund. I do not have clients. I do not provide personalized investment advice for fees or commission. Big thing right there. That is a legally put in there. Lawyers have drafted this, obviously, ever since Deep Effing Value, also known as Roaring Kitty, also known as Keith Patrick Gill, ever since he went dark on Reddit. I said the reason he went dark is because his attorneys are saying, shut the F up. You're digging yourself into a hole. Stop saying diamond hands. Shut up. Get off Wall Street bets. Do not lead people into potentially, diamond handing this and then potentially losing more money because then you're just going to get sued more. Get off the platform. If you want to sell and take your gains, do it, but that's on you. Just shut your freaking mouth. I guarantee you that's what the attorneys told him. So, so here's his defense. I am an individual investor. It's very important how he's clearing this out because what he's saying here, by the way, will be used in other lawsuits in the future. He's already being sued for potentially manipulating the market is a lawsuit he's dealing with. My investment in GameStop and my posts on social media were entirely my own. In other words, he wasn't compensated by GameStop or whatever to run this up, which is another potential legal argument, right? Then, I did not solicit anyone to buy or sell the stock for my own profit. I didn't pump it up. I did not belong to any groups trying to create movements in the stock price. that potentially could get debated because you're part of Wall Street Bets. But the argument here he's making is trying to create movements in the stock price. This is important because it's when you collude with others that you create a pump and dump. This is we're 3 sentences in, and the legalese that's coming through here is a very strong defense so far. I've never had a financial relationship with any hedge fund. I had no information about GameStop except what was public. It's no secret information. Nobody told me anything. I'm not an insider, is what he's saying. All legally important things. I did not know any people inside the company. I never spoke to an insider. See, look at that. Literally, the next slide just reiterates that. He's not an insider, is what they're trying to say. This is a legal defense, is what this is. As an individual investor, I use publicly available information to study the market and value of specific companies. I consider a complex array of factors and track hundreds of stocks. It wasn't just GameStop, it's hundreds. All in search of market inefficiencies. Like many people, sometimes I post on social media my thoughts and analysis about individual stocks and whether they are correctly valued. Very strong statement here, because it's like, hey, look, a lot of people do this. Look at that guy, Meet Kevin. He talks about stocks every day. I did that with GameStop. I believe the company was dramatically undervalued by the market. The prevailing analysis about GameStop's impending doom was simply wrong. Okay. A little of my background. I grew up in Brockton, Massachusetts. My father was a truck driver and my mom a registered nurse. I was one of 3 kids and the first in my family to earn a 4-year college degree when I graduated Stonehill College in 2009. Amid the Great Recession and without a long-term job, my first post-college job was in operations at WB Mason, an office supplies company headquartered in my hometown of Brockton. Between 2010 and 2024, I worked for a family friend at a startup company in New Hampshire, trying to build a software program that would help investors analyze stocks and offer related research. Oh, so Deep F and Value tried to do some research. We also tried to start an investment firm, which dissolved, interesting, not long after it was created. My salary never exceeded $40,000. Of course not, because you don't want to pay yourself more at your S corporation, because then you'll be paying more taxes. Nobody's salary exceeds $40K in an S corp. Anyway, that's not necessary. That's not true. I'm just making that up. Anyway, but I did learn something about investing. I learned how to do the tedious work of digging through a company's financials and focusing on its real long-term value, not prevailing market sentiments or headlines. I married my wife, Carolyn, in 2016, and I found a job working operations and compliance at Lex Shares. I left that job in March of 2017, and for the next 2 years, I was effectively without a job. During that time, I began actively analyzing a wide variety of stocks to try to keep and increase our limited savings. It was both a way to make money and an interest that I pursued passionately while I lacked a job. In April 2019, I accepted a marketing and financial education job at Mass Mutual. Carolyn and I were both happy about our prospects. I never made a salary over $100,000 a year before. Ooh, so I was making over $100K a year now. And I was thrilled just to be working and have benefits again. My title was Director Financial Wellness Education. My job was to help develop financial education classes that advisors could present to prospective clients. I never sold securities, and I was never, he was not a financial advisor. Continued analyzing stocks in my own time and investing my family's funds. In early June of 2019, the price of GameStop stock declined on worse than expected earnings, and it began trading at a deep discount below what I thought was its fair value. I was aware from public reports, public keyword, that a well-known investor, Michael Burry, was interested in GameStop. Because I thought the stock was undervalued, I purchased call options on June 7th, 2019. I increased my position throughout much of 2019 and 20 because as I continued to analyze the company and its prospects, I became increasingly confident that the share price was indeed deeply undervalued. 2 important factors, based entirely off publicly information, gave me and many others confidence that GameStop was undervalued. First, the market was underestimating the prospects of GameStop's legacy business and overestimating its likelihood of going bankrupt. GameStop, the only major retailer dedicated to gaming, has over 60 million members in its loyalty program and continues to maintain a sizable market share within the gaming industry. I have to say, I'm pretty sure I'm in that loyalty program, and I haven't been to a GameStop in like 10 years. Anyway, moving on. Its legacy business, comprised primarily of selling physical video games and related equipment within their stores, was likely to generate meaningful cash flow following the release of new gaming consoles in late 2020. True, one-time event, but yeah, I agree. I grew up playing video games and shopping at GameStop, and I look forward to buying a new console at GameStop. In other words, nostalgia, right? This is a brilliantly written letter so far. And this is going to be the congressional testimony tomorrow. I knew the company had an opportunity to reinvigorate this business by improving customer service for their gamers, upgrading its online presence, and offering complementary product lines such as PC gaming and accessories. Second, I believed and continue to believe that GameStop has the potential to reinvent itself as the ultimate destination for gamers with the thriving $200 billion gaming industry. The new console cycle provides GameStop a unique opportunity to pivot from a traditional brick and mortar mindset to a technology-driven business that excels in gaming products. I mean, he's going through this whole thesis here on why he believes GameStop is so great. And obviously it's put together by him and his attorneys, but it's being done as a way to say, we weren't pumping and dumping. Look at how much we believe in this company. I went to GameStop as a kid and I still go. By embracing the digital economy, GameStop can pursue new revenue streams, including larger gaming catalogs. Gaming catalogs. You remember strategy guides? Man, those were the days, getting a new strategy guide. Digital content and community experiences, online trade-ins, streaming services, and esports. Competitive gaming, I agree that. I like GameStop. Let's see here. So while I may be the only panelist here today, who had, look, he said had. While I may be the only panelist here today who had faith in GameStop, I'm telling you, man, this guy's sold. This guy's out. GameStop. Yeah, I see the comments here. Totally, he's got videos about this, and he talks about all of this. So it's totally true. I'm just saying the way they're talking to Congress is providing this information. So I was hardly the only person who advocated the points or ones like them. Investors, including Chewy co-founder Ryan Cohen, whose purchase of GameStop shares and advocacy of GameStop, of the GameStop board, helped positively affect the share price in late 2020, publicly expressed similar views. I want to pause on the note that the investment I made was risky, but I was confident in my analysis and I was willing to accept the loss if I was proven wrong. My timing was far from perfect, and many of the option contracts I purchased expired worthless because GameStop's price remained depressed for longer than I expected. Here we go, moving on. I've been asked why I decided to share my investment ideas on social media. My investment skill had reached a level where I felt sharing them publicly could help others. I also thought by sharing my own ideas and accepting critiques, I would be able to identify holes in my analysis. Smoking hot argument. That is a really good argument. Such a good argument. Folks, when I post a video on YouTube and I'm like, y'all, this is what I think about Bitcoin or Tesla or whatever, like, and I'm really excited about it. Yeah, I hear about it in the comments if I say something wrong. It's definitely true. Hedge funds and other Wall Street firms have teams of analysts working together to compile research and critique investment ideas, while individual investors have not had that advantage. Social media platforms like YouTube, Twitter, Wall Street Bets on Reddit are leveling the playing field. Oh, such a strong argument for the little guy. Yes. Come on, folks. Money arguments here. Yes. Good job, attorney. While in the year of quarantines and COVID, engaging with other investors on social media was a safe way to socialize. I'm not out there drinking and doing drugs. I'm looking at financial statements and sharing my ideas. That's brilliant. Such a good argument. This is good. This is gold. We had fun. Yes, we did. Here we go, folks. We got the diamond hand, man, right here. Boom, diamond hands. Wall Street Bets. Okay. The idea that I use social media to promote GameStop stock to unwitting investors is preposterous. I was abundantly clear that my channel was for educational purposes only. Remember, folks, I'm just a dude on YouTube. This is all just for entertainment and educational purpose. Oh, he said educational. We usually say entertainment purposes only. Ooh, educational purposes only. And that my aggressive style of investing was unlikely to be suitable for most folks checking out my channel. Whether other individual investors bought the stock was irrelevant to my thesis. My focus was on the fundamentals of the business. It's worth noting that after 5 months of streaming, my final stream of 2020 topped out at just 96 concurrent viewers, with an average view duration of 25 minutes. So before he went viral, basically, he had 96 viewers at one time. On Christmas morning, I had only 529 subscribers on YouTube, 550 followers on Twitter. That's blown up. These numbers are tiny. There were rarely more than a few dozen folks on a stream at any night. The reality was people didn't really care about boring, repetitive analysis of GameStop and other stocks, and that was fine. For those of us who did care, the stream provided an outlet for refining our fundamental-based thesis. We were able to analyze events in real time and keep each other honest. Ultimately, my GameStop investment was a success. But the thing is, I felt that way in December, far before the peak, when the stock was at $20 a share. I was so happy to visit my family in Brockton for the holidays and give them the great news. We were millionaires. That money will go... That money. Dude, this guy sold. You know he sold. It's all right. We've been saying he sold for a long time. We don't have the guarantee, but that's the expectation. That money will go such a long way for my family. We had an incredibly difficult 2020. In addition to dealing with COVID, we lost my sister Sarah unexpectedly in June. God, oh, that's terrible. That's terrible. That sucks. It brought me tremendous joy to share good news with my family for a change. I'm grateful to be able to give back to my community and support my family. Most of all, my wife Carolyn, who has stuck with me through very tough times. Oh, it's so good. Jeez. As for what happened in January, others will have to explain it. Oh, so smart. Woo! Threshold lists, order flow, halting purchasing, according to the media, all had a material impact on GameStop stock in January. Here's the thing. I've had a bit of experience, and even I barely understand these matters. It's alarming how little we know about the inner workings of the market. I am thankful this committee is examining what happened. I believe an analysis of GameStop's recent price action must start with a discussion of the exorbitant short interest in the stock. That's right, man. Turn this around on those short sellers, as well as an investigation into any potentially manipulative shorting practices and brokers' reported failures to timely deliver shares and, settle trades. As far as what I expect moving forward, GameStop's stock price may have gotten a little bit ahead of itself last month, but I'm as bullish as I've ever been on a potential turnaround. In short, I like the stock. Notice he doesn't say he's still holding the stock. And what's stunning is the fact that as far as I can tell, the market remains oblivious to GameStop's unique opportunity within the gaming industry. Boom! What a letter. What a letter, folks. That's powerful. So that is Deep F in Value, also known as Roaring Kitty, with a really powerful and emotional letter here. Really incredible. So let me know what you think about this particular breakdown or the letter and the contents of it. Obviously, I'll be streaming this live tomorrow, so we'll get to hear him read his testimony, but also go into Q&A live tomorrow at 9 a.m. Pacific time, so stay tuned for that. Okay, cool. So let's get back to the sticks. I'm really interested in this. This is going to be a very interesting, not only testimony, but process tomorrow. So this is Deep F in Value. I do want to get an update here on the sticks because I owe that to you. But I mean, really good thesis on GME, I have to say. I also want to say, it's not like I'm not offended that if he sold, he sold. We don't know with certainty, but we think that's the case. I kind of would expect that because, dude, like you said, they're millionaires now. They're set, So I'm excited. I'm happy for them. Obviously, they nailed it with this stock, Deep F in Value. Good job. It'd be interesting to see what his next stock pick is. Let's listen to CNBC for a second, see what they're talking about.
The general gist of what lawmakers take issue with is the same for each of them. On this one, they have totally different approaches and totally different roles that they played in this whole saga. So it's going to be very confusing, no doubt about it. Mike, pivoting back to the markets, the one thing I've just noticed that's kind of continued to ramp after hours and for the final few hours of the session is oil, now up 2.7% or so on the day by the end of things. So it'll be interesting to see if that run for energy, which has dominated this week, continues.
Just a huge portion of drilling, is just offline right now for weather reasons. So certainly the momentum just has that going for it right now, based on the weather conditions alone in Texas and elsewhere.
We're out of time here. Hot Closing Bell. Thanks so much for watching. Another record close on the Dow, not quite for the others. Fast Money continues discussion right now.
All right. So let's go ahead and jump on over to we'll see what's going on in the sticks here. Interesting. Yeah, I mean, makes sense that oil's going up because of, these shutdowns in Texas, right? Texas is like oil capital of the United States. So that'll be very interesting to see what happens there. Okay, let's go ahead and we've got Bloomberg up still. Very, very good testimony. I have to say, I was impressed. I think it was very well written. I think it was very carefully written, and I think they were very smart to really include their legal arguments up front. If you know, I'm sure you noticed, like, they came out of the gate and basically said, this is not a pump and dump. We did not pump and dump this. Not only did they reiterate that, but, through using the correct sort of definitional verbiage, but they really gave the full story, about how this is just some dude sharing his opinion on YouTube. Like, it doesn't really matter how many people or how few people are watching. The point is, this is somebody who wants to help people out, and he's sharing his perspective on a stock. We'll see how Congress responds to it. I honestly, after that letter, I don't see how Congress could beat this guy up. Like, I can't see what kind of questions they're going to try to beat him up with. I think this was really, really well done. So we'll see what happens. I do want to see or pull up here just for a moment. Well, actually, let's before I go there to the sticks, I want to see the Walmart.
So I don't see any reason why, in an environment where the broader market's trading at 23 times next year's numbers, Walmart shouldn't trade higher than 25, probably closer to 30.
And by the way, I mean, when I took a look at historical PEs relative to itself, right now, Walmart's PE doesn't look any higher than the 5-year average, Karen. So, I mean, if you want to poke a hole in terms of the PE, it's not quite there yet at this point. What do you think?
Yeah, I don't know about Walmart trading for higher multiples. Just massive company, got some legacy issues there. We'll see how they do with online delivery. I think that's going to be the next frontier, honestly, for Walmart. Obviously, even Target's struggling with it. Doing well, online sales up, but still. Rob, what? Oh, come on, Robinhood. Look at this. On Bloomberg, on the Bloomberg terminal, the day before congressional testimony, folks. Oh, the day before. Robinhood misses IRS deadline to give users their tax form. Customers of Robinhood Markets, eager to get their U.S. taxes filed, woke up Wednesday to find the company missed a government deadline to provide forms. And that's because a spokesperson for the firm blamed special processing requirements and delays with a vendor for missing Tuesday's deadline. Woo. Vast majority of users will get their forms by Wednesday evening. Okay. Oh, they texted Bloomberg. Okay. Text is so awesome. Love texting. He took at least $15 million in profits from the screenshots. Yeah. Yeah. Geez. Okay. Somebody here on Twitch says, such a huge fine. Oh, Scott. Yeah, folks. Okay. Yeah, let's do that. That's actually a really good mention here. I do want to hit the candlesticks here, but I want to pull up something special. So let me see if I can find it here. So we've got, where is it? See, it's just not indexed yet. Oh, there it is. It is indexing. Okay, check this out, folks. Look on screen right now. Check this out, folks. At 6 p.m. tonight, I will be live on a new podcast channel. Nothing's going to change with my channel. We're still going to do the same old usual stuff here that we do. The stock course is not free. No, the stock course is not free. But if you use that coupon code HODL, you'll get 38% off, HODL or HODL. And look for the stocks and psychology of money one. But anyway, take a look at this on screen here. We will be live at 6 p.m. tonight with Jeremy from Financial Education, Graham Stephan, and Andre Jick talking about really money, investing, and we named the channel Millennial Money. So it'll be pretty fun. So that'll be at 6 p.m. tonight, California time. So that's 9 p.m. Eastern time. Go check this out. The best thing that you could do, because I don't know if this is going to show up in your feed, the best thing to really do is go over here and, zoom out of the darn thing. Here we go. Go over here and subscribe to the channel, Millennial Money. We have a very large 1.83 thousand subscribers. And would love to have you there. So that'll be tonight. And you can also set a reminder there. Okay, let's go ahead and get to the sticks. Okay, so sticks. Where are we on the sticks? After hours, Twilio sticking at 11%, not getting up to the 11%. Let's see. We've got Tilray, 9%. Sundial moving up. Yep, cannabis moving up here. Microvision trying to come back. We got, so that's nice. Cheesecake Factory turned green. Matterport stays up. Very nice. Very nice. Rocket Mortgage is at 2020. I'll tell you one thing that's 2020, and that's not to buy a mortgage company in 2020. Whew. Sorry, bad jokes. Okay, let's look at the losers. SunPower, Naked, Fastly, QuantumScape. What a volatile after hours here. Darden, I told you Darden would sell off on that information from Cheesecake Factory. Not a surprise at all there, but again, expected. Yeah, Millennial Money. That's the name of the other channel. Yeah, I don't know how I can link. Oh, you know what I could do? Here, hold on. I'll make a link right now that you could redirect to, so that way you could see the video. So give me 1 second here, and I'll make you a link. And then I want to, let's see here. Okay, link, create link. Okay, here we go. Okay, so go to MetKevin with 1 E. metkevin.com/MM, like millennial money. So go to metkevin.com/MM. and you'll be able to sign up for that notification. Okay, let's listen for a second to CNBC, see what other kind of information we're getting here.
In terms of the interesting period that we enter, because when these companies are talking about forward guidance, we are talking about overlapping quarters last year that were during the pandemic.
Yeah.
Walmart wins, Target wins, Costco wins, to Dan's point. And I think in the case of these companies, the rich are going to get richer in this environment. And I don't want to jump the inflation shark yet either, but that's a huge component of the thesis here behind these stocks. And it's, again, it's here. We just don't acknowledge it. But I think Walmart wins. You know what else wins? The Dollar General, by the way, that we've talked about. They're another winner through this entire thing. I think JP Morgan just put them on their focus list with, I think, a $254 price target. So in terms of the companies, the winners will continue to win, and the ones that are left on the side are going to continue to be left on the side of the road. Unfortunately, that's just the way this has been playing out over the last 9 to 10 months.
I love it when you guys say we're going to talk about inflation, but I'll talk about inflation right now. We'll talk about it more later. So we might as well just talk about it right now, because this morning we got a major warning sign about inflation. Producer prices climbing more than expected in January. We talked about this issue at the top of the show yesterday. Today, we get this data in the morning. Is this proof, Tim, of what we were talking about last night? The economy is heating up and potentially heating up faster than we all think.
Yeah, I think you have to be careful about PPI. It's a very volatile series, and I think there are factors here that a lot of people also believe are going to fall off on your yearly comps when we get out into April, May. Some of these are COVID related. I think if we were looking at emerging markets and we saw higher PPI in China, we'd be doing cartwheels and we'd be buying that market. So the inflation conversation that we weren't going to have earlier and now we're having, and we had yesterday, and we have inflation. We have different forms of inflation, and ultimately, I'd rather see inflation than deflation. I think you've had a very interesting, kind of burn through on extra slack in the economy, especially on the services side. I think that's really where we're going to run into it. And I think you're going to see a lot of businesses passing through those costs. I think in the short to medium.
So something to know here, and I want to go back to the Bloomberg terminal and the sticks here, is when they talk about services, think about like all the people who haven't been getting their houses cleaned, or the real estate business. How many real estate agents have less sales because people don't want to move in this? It's going to be very, very interesting. Very interesting. So I did, by the way, I made the link available now at meetkevin.com/mm or metkevin.com/mm. So you can see that, metkevin.com/mm, and you'll link over to that podcast, which again will be airing tonight. Okay, let's go back to the sticks. And I also want to look at what the heck is going on in the Bloomberg terminal. So we've got SunPower, QuantumScape, same losers here right now, unfortunately. Zom not really moving, and after hours a little bit down. We got Canoe going right back to 15. Canoe just sits on the sidelines all the time. Let's see. Okay, Twilio Tilray, a little softening here. A little bit. We're actually not seeing that breakout like we kind of saw in after hours earlier. So a little slower. Okay, let's look at the terminal. Let's see what's going on in Bloomberg here. Bloomberg terminal. What else is going on in the news? Let's look at the all news sector right here. Okay, so falling off the list here. Cleveland, Prudential Bancorp. Nope. Find some news. Lithium prices may fall as Albemarle misses year view. So yeah, minerals are so tough for me. Or materials. Carsales.com upgraded to buy from neutral by UBS. Oil states. Okay. Email payments. Elon Musk got Clubhouse notice. Oh, Elon Musk got Clubhouse noticed. Now it's valued at $1 billion. Wow. Yeah, I think he did a good job on that one. Going on and doing those interviews. Okay, what else? Waiting for capital. Okay. Twilio stock jumps. Yeah, okay. So nothing super exciting here. Okay. I think we've kind of covered the post-market here today. Nothing's really moving and shaking right now. We'll quickly listen in. I do want to listen a little bit more to this inflation argument. Let's see, unless they're talking about Lulu now. Let's listen.
I'm a little skeptical, not 100%, but I'm a little skeptical of this notion of this rise in inflation temporary only.
That's me.
It's possible that's the case.
That's
I think, we're going from an economy that was shut down to one that's really going to be jump-started. Those January numbers were enormous. And I don't think that's the end of the big numbers. I think we're going to continue to see them. So I guess the Fed could be right. But at the moment, it seems to me that inflation is more present than just a transitory, once we open, then it'll go back to the way it was. I'm not really sure if that's the case. So I think, positioned for inflation. If it skyrockets out of control, then I think the whole market goes down. We come back to that notion of what's the right risk premium. If interest rates go up a lot, then the risk premium gets higher, multiples come down. That will happen.
Yeah.
So a little inflation is good. I agree with Tim. A little inflation, that's where we are. It's good for now.
Yeah. It is interesting to think that the Fed, thinks that they could have it under control. I mean, we are coming to a point where things will only get better for the economy, and people have a lot of money. I mean, with the stimulus checks going out, households have a lot of money in their bank accounts. People are all, cooped up inside. They haven't spent on any vacations. Guy, I know that, you may have bought, Lululemon pants for $120. You won't mind if inflation takes that $120 pants to $125. For a lot of consumers out there, they want to spend that money. And as we go through the year, that is going to heat up more and more.
I believe that Lululemon aficionados call those joggers, and I haven't. I'm still a Levi's guy. I still have the same jeans that I had in high school, in case anybody cares. And you should. And Karen mentioned that the Fed might be right. I might play shortstop for the Yankees this year. Neither one is happening, and the Fed is not right, respectfully. And every time they open their collective mouths, the wealth gap in this country continues to widen, because guess what, in my opinion, inflation's great for the wealthy and those that have assets, and it's really miserable for people that are on the other end of the spectrum and don't. They're the biggest culprit in this wealth creation. We used to go to barbecues back in the day when they actually used charcoal. And I'll just give you this visual. And there was always that one dude standing above the charcoal with the gray charcoal, just sort of the smoke coming and always pouring the lighter fluid on it. And he always would throw the match in, and you knew what was going to happen. You could see it. He was going to throw a match, it was going to catch, and his eyebrows were going to be gone. Well, that's what's going to happen with the Fed. Jerome Powell better watch his eyebrows because they're about to get singed off.
I don't know what kind of
Back
barbecues
to
you
you.
go to. Moving on, we've got an earnings alert for you. Shares of Baidu are jumping after its latest earnings report. Let's get to Deirdre Bosa with the details. Debo.
What?
Melissa, the turnaround story continues. Baidu's strong results helped not just by recovery in advertising, but also by its newer businesses. That includes AI, cloud, autonomous vehicles. Now, Baidu's core revenue, which includes search and digital advertising, that grew just 6%. Non-marketing revenue was up 52% year over year. In the release, co-founder and CEO Robin Li saying, quote, "Our focus on innovation through technology is paying off. Baidu is well positioned as a leading AI company with a strong interest."
Wow. Okay, so good news here on Baidu. But let's touch on that for a second with inflation. Yeah, I mean, look, you've got the Federal Reserve, folks. The Fed is like, hey, we think inflation's. Here's basically what the Fed's saying. The Fed's saying, look, we're going to have higher inflation readings coming up in April, May, and June. But we think that that's not going to be sustained. We think that that's going to go away. And in the future, inflation will go back down. We think that'll be temporary, and we don't plan to do anything about it. Well, by suggesting that, obviously, this person here, guy, says, yeah, you're wrong. And you're about to get burned, basically, because you don't see what's happening. And what's happening is potentially a larger inflation coming. Look, larger inflation coming means higher interest rates, which means a higher cost of borrowing, margin goes up, real estate costs go up. Again, it's going to be interesting. That could definitely hurt. So we've got a lot of, let's see here. You know what's fast? Oh, we don't have it yet. Darn. I really wanted to say, oh, look what I got here, folks. Should we read this? Is this worth it? Well, check this out. Okay, hold on. Oops, wrong button. That one right here. What do you think, folks? CEO of Melvin Capital, written testimony. Is it worth it? Yeah, wow. That could be kind of interesting. We've seen like Vlad on before. We've seen the co-founder of Reddit actually is coming out here. We got Kenneth Griffin, but we don't have testimony from these folks yet. I mean, we'll Melvin out of all of them, honestly, could kind of be worth it. Let me airdrop this really quickly to myself on the iPad here so we can look at it. And we'll take a look and see if this is even worth it. Let's see how juicy it is. I don't think it's going to be as exciting as Roaring Kitties there, but deep F and values. Okay, let's port this on over. Okay, let's see here. iPad. Okay, here we go. It's coming up. Should be interesting. Okay, so I'll do, just in case it's juicy, like the other one was, we'll do a quick little intro on this one too. Okay. Cool. All right, here we go. Hey everyone, me Kevin here. So as we know, tomorrow there is going to be a whole host of testimony on what the heck happened between Robinhood and GameStop and Wall Street Bets and Melvin Capital and Citadel. Well, we have the written testimony here from Gabriel Plotkin, who is the founder and chief investment officer from, wait for it, Melvin Capital. Ooh, the big short seller of GameStop. This is kind of like the opposite of what we saw from Roaring Kitty, or it presumably will be. Let's take a look at this. Here we go. Here it is. Woo! Okay, here we go. So we've got Chairman Waters, Ranking Member McHenry, and members of the committee. I would like to thank you for this opportunity to share Melvin Capital's perspective on the recent trading activity in GameStop. I am the founder and chief investment officer of Melvin Capital. I am humbled by these unprecedented events. Yeah, dude, because you just took a few $1 billion and lit it up into flames. You got burned. Okay. So many investors on all sides have experienced losses. I'm here today to share my personal experience and be helpful in this conversation. Yeah, dude, people are looking at you, bro, and in terms of the guy who's getting some spanking. I understand that part of the focus of this hearing is the decisions of stock trading platforms to limit trading of GameStop. Okay, this is hilarious. He's literally starting out by talking about it's Robinhood's fault. It's not our fault. He's basically pointing the finger right away. Oh my God. I want to make clear at the outset that Melvin Capital played absolutely no role in those trading platforms' decisions. In fact, Melvin closed out all of its positions in GameStop days before platforms put those limitations in place. Like you, we learned about those limits from news reports. I also want to make clear at the outset that contrary to many reports, Melvin Capital was not bailed out in the midst of these events. Really? What was that like $2 billion y'all got from Citadel? Citadel proactively reached out to become a new investor, similar to the investments others make in our fund. Dude, you're smoking crack. Nobody's gonna believe that bullcrap line you put together. That is a joke. We didn't need the $2 billion. They just wanted to invest in us because we're really good investors. Really? Somebody wants to invest in Melvin Capital because you just lost a boatload of money on a trade? That all of a sudden made you so attractive that conveniently Citadel comes out and gives you billions of dollars? This is retarded. This is ridiculous. Citadel proactively reached out to become a new investor, similar to the investments others make in our fund. It was an opportunity for Citadel to buy low, right, and earn returns for its investors if and when our fund's value went up. Oh my God, whatever, dude. To be sure, Melvin was managing through a difficult time, but we always had margin excess and we were not seeking a cash infusion. Right. My background, Melvin Capital. I'm here testifying today far removed from my background. I grew up in a middle-class family in Portland, Maine. I went to a public high school. I studied hard and got into a good college. Upon graduation, I did not have a job. Today, I'm married with 4 children, and my time is spent with my family and on Melvin Capital, which I founded 6 years ago. I named Melvin after my grandfather, who ran a convenience store. Notice how they always want to paint like this normal American story, right? I wanted the firm to represent his values: integrity, hard work, taking care of customers and employees, and commitment to excellence. Melvin Capital manages a hedge fund. Investors, such as academic institutions, medical research, and other charitable foundations, pension funds, retirees, and others invest with us. We have 36 employees and hundreds of investors, and I feel a personal duty to all of them. Melvin Capital's long/short investing strategy. Melvin specializes in consumer and technology sector, including companies like GameStop, AutoZone, and Expedia. Most of our investments are long. In other words, we buy stock in companies that create jobs, grow the economy, and develop new products for consumers. We do this after extensive fundamental research, sometimes literally for years. Literally, folks. Literally, we spend years on it because we suck and it takes us that long. When our research convinces us that a company will grow relative to expectations, we make a long-term investment. When our research suggests a company will not live up to expectations and its stock price is overvalued, we might short the stock. Like with our long positions, our practice is to short a stock for the long term after extensive research. We also short stocks because when the market goes down, we have a duty to protect our investors' capital. Oh, okay. Okay, yeah. So you shorted GameStop to protect your investors. That didn't work out. There are laws governing shorting stock, and of course, we always follow them. In addition, it is very important to understand that absolutely none of Melvin's short positions are part of any effort to artificially depress or manipulate downward the price of stock, and nothing about our short position prevents the company from achieving its objectives. It is just Melvin's view about whether it will. Specific to GameStop, we had a research-supported view well before the recent events. In fact, we had been short GameStop since Melvin's inception 6 years ago earlier because we believed and still believe that the business model, selling new and used video games in physical stores, is being overtaken by digital downloads through the internet. And that trend only accelerated in 2020 when, because of the pandemic, people were downloading video games at home. As a result, the gaming industry had its best year ever, but GameStop had significant losses. January freeze untethered to fundamentals. Whew. All right. In January 2021, a group on Reddit began making posts about Melvin-specific investments. They took information contained in Melvin's SEC filings and encouraged others to trade in the opposite direction. Many of these posts were laced with anti-Semitic slurs directed at me and others. It's interesting. Notice how he's making the opposite argument here of Roaring Kitty here. He's claiming that that basically people who posted on Reddit encouraged others to trade in the opposite direction of Melvin, to like purposefully hurt Melvin. Oh, this is interesting. Thunder Nugget says hold on one second. Thunder Nugget here online says that's collusion right there. Citadel claims to not be involved with investment actions that Melvin or Robinhood took against the stock, yet coincidentally invested the absolute or the amount of money that Melvin lost at the same time of the squeeze. Citadel buys 60% of Robinhood's order flow. Let's hope the justice system prevails. Ooh, good comment. Thank you, Thunder Nugget, watching on Twitch. Okay, back to the letter. The post said things like, "It's very clear we need a second Holocaust. The Jews can't keep getting away with this." Okay. Others sent similarly profane and racist text messages to me. Can we get his number? Let's get him on. Let's interview the Melvin guy. In the frenzy during January, GameStop's stock rose from $17 to a peak of $483. Don't I know? My God. I'm pretty sure I have a memento that I will never get rid of because this is part of history right here. Okay. If you got some GameStop, you got to hold forever, man. Diamond hands forever. Oh, I was so close. Come on. I was so close. I almost perfectly timed this. Here, look at this. Take a look on screen right here. Look at that. One share purchased at $459, baby. Yeah. Come on. Who got closer to the peak than that one share of GameStop I got? Come on, show it. Okay, let's keep going. I don't think anyone would claim that price had any relation to the intrinsic value of the company. The unfortunate part of this episode is that ordinary investors were convinced by a misleading frenzy to buy GameStop at $100, $200, or even $483 have now lost significant amounts. When this frenzy began, Melvin started closing out its position in GameStop at a loss. Not because our investment thesis had changed, but because something unprecedented was happening. We also reduced many other Melvin positions at a significant loss, both long and short, that were the subject of similar posts. AMC. That's it? Oh my gosh, loser. I'm personally humbled by what happened in January. Investors in Melvin suffered significant losses. It is now our job to earn it back. And while I do not think that anyone could have anticipated these events, I have learned much from them. And I'm taking steps to protect our investors from anything like this happening again in the future. I look forward to answering your questions. Dude, Melvin Capital guy. Basically, here's what Melvin Capital did. He said, hey, look, short selling's normal. This is like a smoking gun right here. Come on, this is a joke. You got to be effing kidding me. Like, I'm sorry. This is ridiculous. The fact that Citadel invested in Melvin to proactively invest in Melvin because they believe in Melvin. Okay, we'll see. We'll see what the documentation shows on that one. That gets subpoenaed because that's ridiculous. And then he basically blames Reddit for making posts about Melvin. He's trying to take the position that Melvin was targeted because he's Jewish. That's what he's doing here. He's like, oh, I'm getting targeted because I'm Jewish, and now they're trying to do things that ordinarily wouldn't happen, and they're trying to make us lose a bunch of money, and we lost a bunch of money. Well, there you have what the CEO of Melvin Capital is going to say tomorrow before questions. If you found this helpful, consider sharing this. Also, make sure to watch the Roaring Kitty video and make sure to come to the live stream at 9 a.m. Pacific time, 12 p.m. Eastern Standard Time on February 18th to watch the entire hearing unfold live. And we'll get to see the questions and answers too. Okay, check this out too. Let's jump on over here.
Had mentioned the Reddit CEO's testimony is out, so we're getting through that right now. We'll bring you any of the headlines there. For more on what to expect during Thursday's hearings, let's bring in former SEC Enforcement Division Senior Counsel Jacob Frankel. Jacob, great to have you with us. Who do you think has the most at stake tomorrow?
Well, I think everybody has the same, pretty much the same stake, and that is they're all going to be, for the most part, under the spotlight, accused by members of Congress. And at the end of the day, it's really going to take an investigation to figure out what actually happened.
Yeah.
Was somebody responsible at a level that constituted a violation of the federal securities laws? In some respects, it's almost like a political debate. Is somebody going to make a mistake at the table? Is somebody going to say something that will put them in deeper trouble, or at least give rise to an issue, whether it be in civil litigation or in the context of the inevitable ongoing SEC investigations? So my expectations for this hearing are pretty low, because at the witness table, it's about being safe. And for those asking the questions, it's about showing their interest, showing their commitment. But what can Congress really do here is, I think, a much better question. Yeah. I think the obligation really is at the SEC level to figure out structurally and substantively what happened, what can be done, and is anybody culpable?
Yeah. In terms of what can be done, though, Jacob, I mean, all of these parties who are going to be sitting, at this table.
That's what we want to know. Like, we want to know what kind of changes this going to bring in, right?
The rules as they are written today, as Keith Gill or Roaring Kitty had said, if you actually take a look at his YouTube channel and his videos and his posts, he makes it very clear that it is for educational purposes only. Take that at face value. He had full disclosure in terms of, this is where I stand, this is my position, and I'm not trying to promote the stock in any way. Melvin Capital, they shorted according to the rules of the system. And they paid the price for it. And then they had to get an investment from Citadel. Robinhood, they played by the rules of the system. And yes, their value at risk ballooned over the course of that week of January 25th. But they still played by the rules. So what are we looking for exactly?
Well, I mean, a terrible analogy, but somewhat, but a somewhat interesting, comparison was, was anybody shorting stock? Before 9/11, were people selling stock options? Were selling, trading and put options?
Of course they were, but I don't know. It'll be really interesting to see what happens tomorrow. I'm fascinated, especially questions. But that Melvin Capital letter, I don't know. To me, that was kind of a joke. That was sad. Like the Roaring Kitty, Deep F and Values, it was so much better. I don't know. We'll see how it goes. Okay, let's quickly look at the sticks here. See if there's anything left over going on. And we've got Domino's misses. Oh, burn on Domino's. Domino's misses expectations. People probably had too much pizza and they're over it. Yeah, it wouldn't surprise me, actually. That's probably precisely what happened. But anywho, so Domino's down about 7.9%. SunPower also down. QuantumScape accelerating losses a little bit here. AMC down. You know what we need is GameStop to rally tomorrow in support. Enphase up 189. Still obviously down here on average. Twilio, Tilray, OGI, Gores. Matterport, man, keeps pushing. We're going to 21. And Churchill continues its run in the after hours. Big money on that. Obviously, both Matterport and CCAV, some of the big, what should I say? Big gainers of the recent January posts that I made about stocks that I was investing in If you want those alerts as well, make sure to go to the Teachable website, link down below. Check out on the Stocks and Psychology of Money course. You pay for once and you get my alerts. There's no limit on how long you get these alerts. We'll quickly look here and see what other letters there are as well. Just make sure to use that coupon code. That's there, HODL. Let's see here. Do we want to look? I don't think Citadel has theirs posted. I see that question. See, yes, Citadel's Kenneth Griffin has not posted theirs yet, which is unfortunate. So we just have witness testimony from Keith Blotkin. We do have Robinhood's, and then the Cato's here as well. Maybe they're trying to come in as like an outside POV. I don't know if it's worth going through the Robinhood testimony. But let's listen to this for a second. Let's see what they're saying about this.
Strong enough to withstand this again?
Tim, it's a great question, because what you're really raising is, to what extent will the SEC get involved in regulating speech? And it always has not done so. There's Regulation FD that relates to issuer communications, corporate executive communications, and there are expectations with respect to corporate disclosures. We're talking about third parties. The SEC brought a case in October of last year involving a short and distort scheme, where social media was the vehicle for accomplishing that. It's wonderful to hear people say they're not acting in coordination, but we've heard short sellers claim that all of us, who've gone to jail, or fraudsters who've gone to jail, come out saying, now we're going to discover where fraud is in the market and act in the public market's best interest, just make it known. And in fact, they're still playing the system. So to me, I really want to wait and see what the investigation reveals, not what are people saying at the table, but were there coordinated communications? Because I do not expect there to be any regulation of speech, but I think the commission is very much on top of what is said on social media, right, and whether that's being used to manipulate the market.
So let's I don't know. Does anybody actually care to see the Robinhood one? And look, Robinhood's, oh my God, Robinhood's is 13 pages long. Wow. 13 pages. That's insane. I don't think we want to go through. Yes, really? Hold on. Let's listen to what the breaking news is.
A lot about the moderation rules that they have on Reddit, and also talking specifically about Wall Street Bets, saying it is a real community and that the community enforces its own rules, both written and unwritten. He goes on to say they have analyzed the activity in Wall Street Bets to determine whether bots, foreign agents, or other bad actors played a significant role, saying they have not. In every metric we checked, the activity in Wall Street Bets was well within normal parameters, and its moderation tools were working as expected. He goes on to say, we will, of course, cooperate with valid legal requests from federal and state regulators. That said, we do believe that this community was well within the bounds of our own policies. Of course, it'll be very interesting to see, Melissa, what happens in terms of the questioning of Steve Huffman, but that is the statement that he has going into it.
All right, Julia, thank you. Julia Boorstin with the Reddit CEO testimony. Karen, I'll go to you on this. What in your mind is the most outstanding issue that the testimony could possibly address?
Well, there's two. That one that Julia was just talking about, whether they did in fact act as a group, because we've seen other shareholders, 13Ds have to be filed. So that's one question. But also, I think what should come of it is I'd like to see a lot more disclosure on the short side, right? You have to file a 13D on the long side if you're over 5%. No such filing duty exists for the short side. I think that would have made maybe would have just made things more transparent, but maybe it would have happened just the same. I don't know. But it seemed to me there should be sort of an equal parity of disclosure for longs and shorts.
Yeah,
I hope they address that.
Dan?
Yeah, I mean, listen, I think, short selling is a perfectly natural function. If this turns into like get shorty, I think that's a big waste of time.
Get shorty. Okay, so I kind of think what I'll do with the Robinhood one, because it's so, I mean, is it that long? It's got a lot of citations. I mean, it's pretty long though. It's interesting. What I might do is a summary of this, because if I sat here and read 11 pages, I think we'd be here for an hour. So I'll stay tuned on the channel. I'll post a summary. So instead, in the meantime, go check out that Teachable link. I would love for you to get those stock alerts and meet you in the private live streams in the morning as well. Tomorrow will obviously be at a slightly different time because we're going to be broadcasting the testimony. So in the meantime, thank you so much for being here for the Market Closing Live. We've been chatting for an hour and 45 minutes here. If you enjoy these, make sure to subscribe, share the video if you found something helpful. And folks, we'll see you in the next one. Thanks for watching. Bye.